What if I told you the money in your bank account isn't really there? And if everyone tried to withdraw their cash today, most banks would collapse within hours. Sounds crazy, right? But this is exactly how the modern banking system works. And almost nobody talks about it. Most people believe banks are simple. You deposit your money, and the bank keeps it safe until you need it. It feels like a secure digital locker. Your salary comes in, your savings grow, and your money just sits there. But here's the truth. Banks are not lockers. They are businesses. And like any business, their goal is to make money. So, how do banks actually make money? It's surprisingly simple. Step 1, they take your deposits. Step 2, they lend that money to other people. Step 3, they charge higher interest on loans than they pay you on savings. For example, the bank gives you 4% on your savings, but charges someone else 12% on a loan. That 8% difference? That's profit. Now, here comes the shocking part. Banks don't keep all your money. In fact, they only keep a small fraction of it, sometimes as low as 10%, or even less. This system is called fractional reserve banking. Let's break it down. If a bank receives $1,000 from you, it might keep only $100 in reserve and lend out the remaining $900 to someone else. That person spends it, and the money ends up deposited again in another bank, which then lends out most of it again. This process repeats, and your original $1,000 can turn into $5,000, $10,000, or even more in the economy. Sounds like magic? It kind of is. Now imagine this situation. Everyone goes to the bank at the same time and says, "Hey, give me my money." What happens? The bank doesn't have enough cash to pay everyone because most of the money is already loaned out. This is called a bank run, and it has happened many times in history. When people panic, banks collapse. So where is your money right now? It could be funding someone's house loan, helping a business expand, paying for someone's car invested in financial markets. Your money is constantly moving. It's working, earning, growing, but not for you, for the bank. Here's something even stranger. Banks don't just move money. They actually create money. When a bank gives a loan, it doesn't always take existing money from someone else. Instead, it creates new money digitally in your account. That's right. New money is created out of thin air, as debt. And when you repay the loan, that money disappears from the system. This is how modern economies expand. Here are some things most people don't know. Your deposit legally becomes the bank's money. Banks profit more when people are in debt. Most money in the world is digital, not physical. Physical cash is only a tiny percentage of total money. And here's the craziest part. If everyone tried to withdraw their money, there simply isn't enough cash in existence. So should you be worried? Not really. Banks are regulated by governments. Most countries ensure your deposits up to a certain limit, and the system works because people trust it. As long as everyone doesn't panic, everything runs smoothly. So banks are not just places to store money. They are powerful systems that use your money, multiply it, and profit from it. Now you know the truth. Your money is never just sitting in a bank. If you found this video eye-opening, subscribe for more simple finance explanations, because understanding money is the first step to controlling it.